Alright, hello guys, and glad to have you on board again today. I think it was appropriate to do kind of a deeper dive review of the Wall Street cheat sheet, which is one of the models that I use. And remember, every model needs to have an operative framework going along with it. You just can't use a model in every type of context, so you need to have a well-defined kind of context in which you're going to use this model instead of others, or you can sometimes combine multiple of those models. Okay, so this one you might be familiar with. I have been mentioning it more than a couple of times in the past, but I think we never took the appropriate amount of time to dive deeper into it and define the clear guidelines and context in which you can use it properly. Okay, so this is one of many modules that is very well documented and known, but most of the time, despite the high level of documentation, very poorly used or even misunderstood. So this is the reason why I wanted to just give you the basics of what you need to know about this thing, how to use it, in which context it can be used, what you can profit out of, and all of these things. Okay, so let's get it started. First and foremost, the number one misconception there is regarding Wall Street cheat sheet is that people tend to use it and misrepresent it as a kind of model baseline to create bubbles and pops, like to predict crashes. First of all, that's not the case. What this thing does is putting psychological mind states and like psychological misplacements to amplify the simplified market cycle stuff, which means this is first and foremost a cyclical market behavior. Okay, so what matters is that every market acts as a cycle. Cycle is a very huge component of my strategy as you know it. We use sine wave, among others, to predict this thing. But this is just something that can add some spices on top of this sine wave indicator by using psychological mind state to put yourself into this cycle. Okay, so to create the sine wave on your chart like that, you can use psychology. Number two thing is that not all markets can use that psychological mind state to define the cycles. And the third one is that it can only be done on larger time frames, where psychology can truly be at play, which means recurring sentiment will create kind of active behaviors among the trading force. And last but not least, it is generally very visible the more the volatility is active on the market. Because we know one thing for sure is that those market participants who are very sensitive to psychology are the least experienced ones. Basically, retail traders. And retail traders tend to trade as a derivative of momentum, which means the more the momentum is on the market, aka volatility, the more they tend to trade. And the more they trade, the more they take part in every dollar in and out. And as they do represent a significant share of the trading proportion, they therefore influence this market itself with their relative lack of experience and therefore ease of falling into those psychological mindset, which just amplify the amplitude of the underlying cycle. Though, what we need to take out of this is that despite whatever it is that you want to say, psychology doesn't create value out of nowhere. The value is always something that is rational, built upon, and consistently evolving over time, but evolves on larger time frame, which means you can't create value out of nowhere. You can create speculative bubble and Ponzi schemes, but they always collapse. Despite being the most ingenious person out there, Ponzi's rarely last for more than a couple of years. So one thing for sure is that absolutely outrageous speculative valuations can be created, they always get destroyed afterwards. Despite the absolute stupidity of market participants, they will generally go by the lowest, the less desirable outcomes afterwards. So the cycle can't create value out of nowhere. It just pulls it back and oscillate across the value as being above and below value. The value itself doesn't derive from this system. And I generally tend to say people using this to value assets, freaking hell no. It's just larger time frames, so don't ever pull out this model on something like a 4-hour chart or whatever, it doesn't make any sense. So this is daily, weekly at best, and it generally requires high volatility and high momentum beta to consider that you can clearly define the intermediate mind states. Okay, because the problem is the lesser the volatility, the harder it will be for you to figure out the difference between optimism, belief, thrill, the more subjective the analysis will turn out to be. So if you want to make it very straightforward and useful as a type of strategy, you want to combine all these factors. Longer term time frame, high retail implication in the trading activity, high volatility on the assets to clearly define the different intermediate states. It doesn't create or destroy value out of nowhere. This cannot be derived to this. The value is what it is and it can't be changed. It just alters prices in the process. And this psychological mind state will help you figuring out how advanced you are in the overall cycle. Okay, so that's really the way to go. Now that we have set the basics, let's just take a quick example. So of course, cryptocurrency now is full of retail traders, full of shit, and absolutely crazy valuations. So we have all the necessary prerequisites to look for those weekly charts, asset by asset, and we're clearly going to express how to read those things carefully. So the easiest way to go is to let you understand that, well, if you want to look for the most volatile assets, you can use that. I mean, take the alt season indicator, pull it out over the longer time frames, like a 1 year rolling period, and you would clearly see the kind of asymmetric distributions of profits lately, with absolutely staggering numbers of 960 return on the year, and though clearly here are the volatile assets. So if you want to use the Wall Street cheat sheet, you know that this is the perfect place to be, okay? This is where we have the highest volatility and we can be easily deriving the market states and psychology out of these assets. So we're quickly going to roll over these ones. Okay, we're going to look at Injective, Casper, Solana, Render, Floki, whatever, Rune, Fetch. Okay, always remember to have a look at them in a market cap perspective. Remember, you don't look at the USD price when there is so much dilution. You need to look at the market caps, the actual value. Remember that what this thing studies is the derivation from value. The value is what it is. It's the kind of mid part of this thing. Let's assume that value does this, okay, slightly higher if there is a prosperity period, which makes high highs and high lows on the cycles. But basically, it oscillates across the value. Sometimes you're above it, sometimes you're below, and kind of net average is in the middle. Okay, so let's consider that if we put the value on this asset, pretty much be like that. Okay, that means sometimes above, sometimes below, but basically we're oscillating across the value. Be it the value of the asset can be defined with this system. It is either rising, falling, or flat, just depending on the fundamentals of these assets. Okay, so if we take Injective, we have a couple of cycles, which makes it easier for us to study because we can see that there is a series of tops and bottoms. And remember, cycles are nothing but repetitive forever. The cycles amplitude as well as the offset will vary over time. Okay, so nothing in here is predictive for the future. It's just helping us project. So we take out bottom to top in here, and what we can see is that if we project the previous length, we would be at the highest rather than the lowest in here, which is the sign that, well, if we corroborate to what we've stated before, that would be the sign that we're rather in here, we're at the peak, the point of maximum financial risk, far more than we would be at the bottom, which is the point of maximum financial opportunity. Okay, so maximum financial opportunity for this asset would have been somewhere around December 2022, and right now we're pretty much at the peak, which means if you're trading this asset now, you're taking tremendous amount of risk. So that's really the way to go, okay? And of course now we need to understand and figure out all the intermediate stages we will be in, okay? Remember that the bottom is where you would figure out somewhat like depression, anger, whatsoever, disbelief. This is all the negative in sentiment stuff. So clearly in here we would assume that when this thing was trading at $85 million, it was pretty much depressed and so on. The disbelief phase, I would say, well, kind of this could possibly have been this. And then, of course, as you can see, the neutral sentiment, like hope, is generally the sign of a bit of volatility. So I would then say that, well, frankly speaking, yeah, this is possibly the hope phase, okay? This is the area in which we still have some ups and downs in the market, okay? So this could have been the hope phase. Optimism clearly stated itself as being overvalued, which means if this is the average value of the asset, this is the moment we're starting to go above it and rise quickly. This is where the stupid sentiments of bulls starts to line up one on top of the other. It goes optimism, belief, which is basically this rally is real. Yeah, this time to get fully invested. Let's put all my money into this. And now, oh, I'm going to margin fucking trade this. fucking hell, this is really the thing that everybody is going to have to buy. You just can't resist the fact to talk about it. Though this is generally where you see a lot of kind of guru opportunities. You'll see those guys making videos all over the place telling you how great their thing is. Huge communities starting to build around the assets, and then comes the end of it. I am a genius. We're all going to be rich. This is the moment when it feels like it's unstoppable. So where do you think are we with the injective mania, the ninjas fucking stuff and stuff like that? What do you think the value is for this asset? Just look on chain. Nothing is happening for this thing. Most of the transactions are fake. So it's basically the way it is, okay? Robots are wash trading on the asset. The chain itself doesn't do anything more than the others can. So that's really the way to go. I think the value is way below the current prices. I think the last time we've traded at the value was somewhere around $1 billion. And that's pretty much where we were trading between hope and optimism. The optimism clearly started and triggered out of this, out of the 700 million area, when we broke out of the previous all-time highs, by the way. So that's really the way to go. This is where optimism started to kick off. I think the belief phase, time to get fully invested, started in here at 1.3 billion. And now we'll clearly have gone through the thrill and euphoric phase. Clearly now, if you listen to those ninjas, they know the future. They are the DeFi chain, and that's it. Well, if you look at the chain itself, nothing happens in there. The TVL is nowhere to be found. It's just absolute bonkers type of speculation. So be very cautious with that. The ninjas are geniuses. I don't think they are. I've shorted this asset just a couple of days ago, and I think now the rest of the negative sentiment is going to come out of this, meaning that it's going to start to retrace. They're going to be complacent. It's just a retracement. We're going to go all-time highs again. Anxiety, denial, panic, all sorts of usual stuff which we know of. This is kind of the necessary replicate of all those positive sentiments lining on top of each other. The negative sentiment will create the repulsive effect on the opposite direction. Right back down to value, where I think it's just worth somewhat like $1 billion, potentially slightly higher, but nothing more than that. And we're going to go below that value. So remember that what goes up and goes up bonkers will go lower, and will go lower than the value because of this replicated effect of panic and whatever shit that is. So remember, I expect massive liquidation on these assets to come. Not tomorrow. It's just going to take some time. Remember, what goes up will create the necessary replicated negative effects afterwards. And this is where maximum financial opportunity will be. So you want to buy injective, don't be among the stupid ninja stuff now. Just wait until somewhat like 2025, put yourself an alert in the distance and buy it again. Remember, the last time I've warned people on the longer term time frame speculations was 2018. When you were all skyrocketing buying Bitcoin crazy like shit, and I told you, wait for a couple of years, put yourself an alert in the distance, and those who listen to this advice have been very well compensated for the time they went into waiting. That's exactly what I think. Does that mean injective is a full of shit chain? No, I don't think it is. I just think now we're trading it at an absolutely bonkers type valuation. Wait until the valuation is destroyed, which means anger, depression, and nobody wants to listen about this thing. Give it some time. Remember, the time for us to switch from euphoric to anger and depression is going to be time-based. These things takes time. It's not going to happen in a couple of weeks. So there's no way you can keep track of it, but just to say, okay, I know what the next stages are. I don't want to play them. What the heck? Do you really want to short this asset? No, you don't want to. You just don't want to be part of complacency, anxiety, denial, panic. Just get yourself out of this. Put yourself an alert in the distance. Wait for anger and depression. You want to see apathy in this market, and this is really where you want to buy. Okay? When the ninjas will be like, yeah, this thing is fucking shit, and my money has been lost, and that's it. Okay? So wait, that's the moment where you want to buy. You can buy anger as well. This is the moment where all these guys get liquidated. I feel like their asset is so undervalued, but it doesn't respond. So this is really the way to go. Okay, so this is for injective. I think we're pretty much at the end rather than the beginning. Of course, you can disagree with that. I'm sorry for the ninjas. You're not going to like what I say, but at some point in time, just try to be rational. What I'm saying in here is that when you're in the euphoric phase, there's one thing you can do. Okay, so clearly listen to me, ninjas. I'm sorry. You're not going to like what I say, but the number one way to get out of this is to, first of all, acknowledge that what I say here is can at least be rational, and you should at least listen to this. And what I'm saying in here is not I'm telling you, yeah, sell it all. I'm just saying maybe taking some partial profit is the smart thing to do here. The reason why I say that is because this is a net positive. That means, well, taking some profit is, first of all, congratulations, folks. You've got there up. You've got it there. That's a very nice thing. You probably made some money in the process. Just don't be dumb enough to lose it all. So take some profits in here. The number one lesson is that you may still face complacency, anxiety with the rest of the position that there is. But if there's one thing we all know for sure is that the amplitude of those emotional feelings for you as a human being will be disproportionately higher as the position size is bigger. So if you lower the position size, it lowers your implication in this market. It gives you money to eventually look somewhere else on top of it, but it also tells you not to put that money back in, like trying to buy again. Like if you take profit now, don't ever buy again into this asset. Let the complacency, anxiety, and denial, panic, and goes on. You can take some further profits as the stages mature, but the thing is that, once again, don't put your money back in. That's the number one mistake people do. They accept taking profit here, but then, yeah, anxiety, yeah, I'm going to go higher. When the other are going to start taking margin calls and so on, just don't be dumb enough to think the market will go up again. It's just the wave of liquidation and the wave of shit is actually going to happen after, and it's going to be even more painful. Okay, so that's the thing. Reduce the leverage. It's going to give you the opportunity to take control of your emotions. You're certainly not going to be able to destroy the feelings. You're still going to feel the anxiety and the denial and the panic. Just be smart enough to know that you knew that in advance, though these feelings should not trigger the actions. Like, yeah, I'm going to put the money back in and I'm going to leverage my things. No, you're going to be margin fucking cold, and that's really the way to go, okay? You don't want to be the one that sells at the panic. You really want to take your profits in, and as the market goes down, keep taking some. Just don't ever go back into this market until depression is there. All right. So now we go further, because of course Injective is just not clearly the only one out there. Let's just go for CASPA. So CASPA, okay, here we are. That's the first cycle, and here, as you can see, we see nothing as in history. There's no cycle repetition in here. We're already weekly chart. Remember, you don't go anywhere beyond daily, and that's really the way to go. Where are we in terms of CASPA regarding our shit? Do we have weekly chart, volatility, lots of retail implication? Yeah, clap, clap. All three are checked. So we can definitely use the model. Now we try to figure out in here, where are the times in which you still had somewhat of a volatility, which is the hope phase. Okay, so remember in here, there is no depression and anger because there's no previous market action. So the thing in here is, do we see somewhat of a disbelief market going down in the hope phase? Yeah, we tend to say this clearly is, oh yeah, we go up. This is clearly disbelief. Okay, this thing might not be the thing. Then really we have the optimism phase going on in here. This rally is real, and then boom, this stupid shit starts to go in. The belief, the thrill is clearly here. As you can see, a bit of volatility shows up when the thrill is in here. Everybody was like, no, this thing is not going down. CASPA is the future. Even my students were talking to me about this shit. And clearly now euphoric has been reached out, which means back to all-time highs one more time. They're all geniuses. They're going to get rich. The tech doesn't serve any new purposes. Though really, once again, look at the fundamentals. The fundamentals doesn't support the thesis. We're pretty much far away from the actual valuation of this thing. That doesn't mean this thing is worth zero. It just means we're going to get beyond the valuation, which is already further below the current prices. So remember that prices, when they are impacted by psychology, you don't want to be falling for those traps. So now is the time for CASPAs to take profits as well. I don't know how they call themselves, the CASPAsers or whatever. Just once again, be smart, take some partial profits, and wait until the next stages comes in. If you see some more of a retracement and kind of a stagnant market, with people just think this isn't yet another cool off before the next rally, just be smart enough to take another layer of profit, okay? So I would say take one now. When you see complacency, don't fall among the narratives of, yeah, it's going to go higher, whatever, fuck. Just if you start breaking some supports, take some further profits. If you start to feel the anxiety, like, yeah, no, this is a pullback, the thing is going to go there, but why the heck do people still take margin calls? Yeah, that's the way to go. You see signals of people getting liquidated, get the fuck out of here more. And then wait until depression and things like that. So same thing for CASPA. Put yourself on alert halfway through 2025. Expected. This is where probably the opportunity will lie. I'm not saying these assets are full of shit. All I'm saying is that I don't know what the fuck people are doing buying it at such high prices. So that's really the way to go. Okay. Yeah, let's go down the line. Solana now. Okay. So Solana. Oh, sorry, not that one. All right. Solana. Market cap, Always. Okay, interesting stuff. So in here we have something slightly different. We have a couple of cycles we can clearly identify. So we would pretty much reach the end of a cycle rather than the beginning. But remember, this is still hard to say. Cycle can vary a bit, okay? If you just shift that thing for just a little, it could very well tell us, yeah, we might have another few months. So once again, it just says, whatever we do here, we might be late stage maturity. So we want to be very cautious. Now we're going to try to look for the other metrics, weekly charts, that's okay. Volatility, oh fuck me, yes we have some. So definitely going to go through the stages of trying to assess the psychology. So we're going to look for this. We had a bottom in here, so did we find anger and depression? Oh yes we did. Welcome to FTX and welcome to the depression that followed suit. Now, of course, as you can see, this is a sucker's rally disbelief type of thing. Yeah, it could have happened in here, okay? It's definitely violent, but that's the way to go. This could have been like, yeah, this is a sucker's rally. Okay, then we see the optimism phase. This would, frankly speaking, be this to me. And we're freakingly beyond that now, okay? We definitely, everyone agrees that this rally is real for Solana. Yeah, time to get fully invested. Yeah, it goes. Just forget about the rest of the market. It's about time to get all in. I would tend to say we're pretty much nearing the thrill phase now. I don't nearly 100% sure going to say that. I don't know if this is the thrill phase, but I think people are still now going to buy and people will margin if there are retracement. I think this is the phase which we're in for Solana. So that means we've seen the other two were already totally euphoric. I think Solana isn't there yet. I think Solana is at the thrill phase where everybody is expecting to reinforce their position if this thing ever goes down. They're willing to make a lot of money by margining what they bought, and I expect the euphoric phase to actually happen later. But I'm very concerned still. I mean, some of the margin things, some of the behaviors of euphoric is already in the market as well. So that's the reason why I'm very cautious with Solana. I just can't say if it is in the thrill phase or euphoric phase now. All I'm knowing is that we're very late stage. We're, of course, marginally above the value. And the question is, well, how far are we between thrill and euphoric? Because frankly speaking, I see signs of euphoria in this market already. Like the Solana folks just think, yeah, it's going to go up forever if there is ever a retracement and so on. So I'm going to be very careful in the nature of potential retracement for Solana. Because of course the thrill in here in which they're going to margin trade on every market going down, and the disparity with if I see this kind of market moving down and then apathy, I will figure out that we're late stage and probably complacency. Remember that the thrill phase goes quickly back to all-time highs, just like that. This could be the thrill phase, okay? So if we range, I see the people getting boasted, margin trade, and go all-time highs again, that means euphoria will follow suit. Otherwise, we're already at the euphoric phase. Complacency will be next. That means we're going to go down and we're going to range, and it's not going to retry. It's not going to try. There's going to be fake breakouts, and then boom, we're going to break a support. And if that happens, get the fuck out. Okay? So that's really the way to go. That means we've suffered through the all way through positive sentiment, which means the reconstruction to the downside will be absolutely there. That means we'll get by complacency, anxiety, denial, and panic. It's not because it has to be. It's just because, well, surely, just like if you take some drugs, you're going to be high on this, life is great, and so on. And the day right after is going to be full of shit. That's the way to go. If you experience the positives, you're going to go by the negatives. That's the way to go. It's just how it is. Once again, that's a model. Doesn't guarantee 100% success. It's just, well, history has proven that these things were definitely efficient. Okay. Next in line, we have render. Okay, let's go render. So render, market cap as well. Okay, multiple cycles. If we project that, we're pretty much in here at the end rather than the beginning as well. Do we identify the intermediate stages? Okay, so is this a retail market? Yeah, of course. A lot of people are buying render. They don't even use the services. They don't even understand a bit of what it does. But yeah, you know, got to be in there. So that's really the way to go. We have it all. Render is a popular asset, absolutely stupid, AI mania, whatever. And as you can see, the volatility is there as well. Okay, so let's study this volatility. So we have a bottom phase. So do we figure out anger and depression? I wouldn't say anger, but depression clearly is there. Okay, then the disbelief rally? Yeah, I don't think. I think that we've gone very, very quickly in here. There's already hope and optimism at that stage. So I would say hope, optimism, And clearly in here, we can see that the belief and thrill phases are happening in here. Though I think this is as it goes all-time high again, somewhat like November 2023 is where, of course, time to get fully invested, and I will buy more on margin, gotta tell everyone to buy. So, of course, render is the new thing. Everybody has to buy, and now euphoric. So I think we're pretty much late stage now. I think we have the verticality of euphoric. Not 100% sure. We could still have thrill in here going on if for whatever reason this thing retraced. So I don't yet know if I can classify that just like the other AI mania fucking stuff and CASPAs and injectives and the like. Is it already totally euphoric? They're all geniuses. They're going to get rich. Or are they going to be buying even more on margin for a final burst of euphoric? I don't know yet. This thing could be correlated to Solana. I hardly can figure out. So one thing for sure is that we're there. Okay, we're in this phase. But the thing is that I don't yet very practically know where we are. So very cautiously in here. Remember, this is not a perfect science, but we would all agree that we're in this phase. That means one thing is for sure, we're far above the value already, which means if you want to buy, you're going to have much more attractive prices to do in a distance. So you want to buy render, be smart. Don't do it now. Put yourself in a lot in 2025. Buy it when everybody is at anger or depression phases. That's really the way to go, okay? Put it simple on you. Now you're at the point of maximum financial risk. Even though you might be thinking exactly otherwise, like this is the opportunity of a lifetime, I'm going to get rich. No, you're going to lose your money. Don't be dumb, okay? So that's really not the way to go, okay? That's how I would frame for this asset. Next in line, Floki, but this one, frankly, we're going to pass. That's really the way to go. Fetch AI, I think, is a good point to go for the AI mania representative. So Fetch AI, let's go for this. Coin market cap. Okay, same activity, volatility, retail in the market for tech that they don't nearly understand. So let's go for it. Okay, bottom to bottom. We'll do something like that. Yeah. All right. So that could be the phase. We would be nearing the end of it, of course, so pretty late stage, and we're going to try figuring out how much mature. Okay, we've gone through a bottom, so in here, clearly we see the apathic phase in here, which is basically a depression, absolutely destroyed volatility, the same depression as everyone felt after 2021, okay, and that's pretty much how it is. So this is the sucker's rally, okay, of course, this thing goes up, but this thing is bullshit, okay, though there is the recovery phase, it is possible, and so on. Here is the optimism volume, okay, remember, this is where you still see markets going up and down, and then, ooh boy, what the heck do we have? I think we're totally believe thrill of margin, so every pullback on this asset is going to be bought because, yeah, that's the future, bro. I still think there is a bit of gas in the tank for this thing. Option here as well is that if for whatever reason we've got straight line to euphoric, which is a possibility, wait for it. If you see that the volatility is reducing significantly, which means time passes without all-time highs, that's the sign you need to get the fuck out of here. Remember that these things need to go fast. If they ever slow down, just like that, that's the end of it, okay? So you don't want to see a slowdown in here. It might range a bit, but you want to see it all-time highs very quickly afterwards. All right? So this one, advanced stage, best case, thrill, eventually euphoria. Like we stated, we don't necessarily have the sign of euphoria, but we're for sure in the thrill area, which means people will buy more if this thing retraces, okay? So just like we stated before, some assets are absolute bunkers visibly in euphoric phase. Some assets might be earlier in the stage, so they could still have some gas in the tank. And the future will tell if we need euphoria or if it's already passed and on the complacency phase. That works for Solana and the like, okay? So all of these assets, it's not an appropriate time to buy. You're at the fucking point of maximum financial risk or close to it. So not the time to buy. The time to either stop taking some partial profit takings, not margining. Don't let yourself fall into, yeah, if it retraces, I'm buy more with credit. Don't do this. That would put you right in line for euphoric and then the negative sentiment afterwards because you'll be so delusioned to see the things through the right lenses. Okay, now just to give you a bit of perspective, you can extrapolate this to all of the other assets. I've just taken some very easy ones in here as quick examples to see their advanced maturity. Though on the other side of the equation, remember that, well, when you have that, that means the number one prices of what you want to be investing in is at the trough. It's when the maximum financial opportunity is, and this is obviously going to be at the opposite end of the spectrum. So let's have a look at Atom, Matic, and Monero, and you'll see how staggeringly great these things can be. So actually, let's look at Monero first. So XMR, remember, that's the kind of assets. Retails are not very fancy about it now, so that's really the way to go. Remember, the retails have been fancying this in the past a lot. We're in larger time frames. You clearly can see the volatility in here. So one thing you could say is that there isn't that much new all-time highs in here in terms of values, so the value somewhat is stable. Remember, it oscillates between undervalue phases and overvalue phases. The value can't be created out of nowhere. So if you think Monero is valuable, and you need to define that clearly, you see that there is psychological mismanagement impact. There is clearly the Wall Street cheat sheet being at play. Okay, so what would it be in terms of cycle? The cycles in here, as you can see, are much longer than the previous ones. All right, we would be nearing the bottom of this thing. Okay, so this is really an important step. So we would be at the bottom in here, so let's just reverse engineer this thing. Let's just go from peak to peak and figure out. Okay, so that's it. So we would be in somewhat of a slightly upward momentum phase in here. Do we follow suit with the bottom psychology? Have we seen anger? Yeah, I think we did. Have we seen depression? Yes, the volatility has been low in here. So we're currently waiting for disbelief. We're in the phase in which this is a sucker's rally. We haven't seen it yet. So yeah, I think a sucker's rally is coming along the way for Monero. Okay, now next, Atom. CoinMarketCap. Okay, here we are for Atom. Sideways already there. Just did it for the French guys before. So that's really the way to go. We're pretty much nearing in the bottom in here. We already had one separated by the peak. Do we follow suit in here with the crash patterns? This is definitely follow suit. Anger? Yes, we felt it. I was number one in line in here. There was lots of denial, anxiety, and all of these margin calls in here with people getting liquidated for no reasons. Thank you, Terra fucking Luna. But that's really the way to go, okay? So Atom has been a collateral damage for the Terra Luna shit show, and that's really the way to go. Liquidations have happened. Everybody was selling. Capitulation has gone in. Anger was totally there. I felt it personally. The depression has gone there in here. That's exactly where we felt all depressed. I mean, the community was just so outrageously feeling PTSD stuff. So that's really the way to go. I felt it myself, and we are now in the disbelief rally. Okay, so that's clearly it. This is a sucker's rally. This is where everybody is thinking that we're in now when it comes to Atom. This thing is going to pop. That's just inevitably going down. It underperformed the market, yet we are not. Remember, if this is the bottom, okay, that means we are due for the recovery phase. So we're just at the beginning of the cycle in here. We're in phase 1. So Atom, pretty late in the cycle, okay? And we said another one was a Matic. So let's go Matic. Oops, sorry, not that one. So let's go Matic to terminate this story. So Polygon on a market cap basis. Okay, we can clearly see the cycles. That's great. So what do we have in here? Lots of volatility. Are the retails interested into Matic? Yes. Okay, so that could be something like that. This would be definitely anger. So what the thing is going on? Why do we all get, you see the liquidation and so on. So here it goes. Let's go back with our stuff. We don't see in here the depression phase. This is the reason why I'll be very cautious with that. I think there is a cyclical behavior on Matic, but I don't see the depression phase. So we stop at it. Okay, we've seen a bullish cycle, but the bear cycle doesn't follow the pattern. So Matic, I wouldn't take this with it. I would say there is still too much volatility in here. That means this, remember, this asset is still following its own value, but in here, I can't use the Wall Street cheat sheet to figure it out. The cycles in here are hard to see, hard to predict, and there seems to be no more financial psychological state in this market anymore. The bottom patterns in here are not visible. So we can't use this system, all right? That means despite what happened in here, we're not under the capitulation phase that we've seen. We've seen what could be anger of some sort of anger, we don't see this kind of apathetical phase. There's still too much volatility in the system. So don't try to fit the model where it just doesn't fit the pattern. When it fit the pattern, just fucking use it. When it doesn't, don't. Okay, so that's really the way to go. Too much volatility on Matic to consider that something has gone on. All right, so that's really the way to go. Last but not least, I would like to argue on the fact that once again, people tend to think as a generalized manner because that's the way the human brain is connected to do. That means when something happens, you tend to feel like it will replicate again. So what happened in 2021, if we just overlap in here, I just put it Atom, Solana, and Injective to just show you how tricky the situation is today and how it is going to be trickier even in the future, is that 2021, everybody was kind of in sync. As you can see, everybody went up, different amplitudes, remember once again, but they all followed suit with the same types of patterns, okay? All the cycles were in sync, though the bottoms were as well. But what we can see here is that the recovery phase was significantly different. When it comes to Injective, it started way earlier, like in January 2023. For Solana, the recovery phase has started October 2023. For Atom, it hasn't even started yet. You might be at the beginning of it at the suckers rally now in March or April 2024. So one thing is for sure, this cycle might have been perfectly in sync in 2021 and 2022. The sign is that the duration of their bottom just tells us one thing about the bullish cycle that's to come. It's not going to be in sync. And yet people tend to think of it all the time. One thing I hear almost every day now is, yeah, Atom is underperforming. Monero, well, these are full of shit assets. Look at this field, the rest has gone to the moon, and these things haven't moved. I think they're just in different classes, and that's one thing I've learned through the times in speculative markets, in the TradFi thing, is that there is a risk rotation in the market. It's generally high-risk alpha trades, very dangerous ones, which the investors go in, speculative things, whatever. Then it's generally followed by a growth cycle, which is generally more fundamentally supported kind of assets, more liquid stuff and stuff like that, but they generally pull it to the moon. Remember, growth stocks. And there's the value cycle, which is generally the last one to happen. It's more sustained. The revenues are there. It's not crazy bullish because there are heavily liquid assets generally giving dividends and stuff like that. So that's the way to go. And the cycle generally rotates like that. What we have now is that, typically speaking, 2021 was all those cycles all together. As you can see, some asset to the moon, some growth asset to the moon as well, and the value stocks basically doesn't really perform crazy. Okay, so that's really the way to go. Sorry, in here we're not in relative scale. All of these have different scales, so don't figure out the amplitude, okay? But we had all the values and along in the same thing. Now it's all changed. The durations are changing, which means I think the rotations are definitely going to happen in the future now. And what you can see is that it is expected to last for a long time before all these things ever get in sync. So, of course, remember, these cycles are not repetitive and predictive, but as of now, one thing is for sure, we have definitely some significant offsets that are lasting for months. Remember in here, this is almost a year difference between Injective and Atom. That tells the majority of their stage that Injective is at the end today, where Atom is at the beginning. And that gives some significant arbitrage opportunities. Meaning, sell the fucking speculative assets for the growth assets is the best thing to do now. That's exactly what I've done personally. No financial advice. Do whatever it is that you want with your money. But what I'm saying in here is that don't ever think about the alt market as a whole. There is no such a thing as a whole thing market. There are different scenarios, there are different contexts, there are different maturities, different cycles. And I think now is the time to get out of those speculative assets. Maybe go into the value trades, which are still undervalued. Remember, in the cycle now, we're not at the bottom for Atom, but we are clearly not overvalued yet. So that is all I had to say for you today. Hope you've learned some valuable stuff. Thank you guys. See you in the next one. Bye-bye.